Like and subscribe. The $1 Investor. Here's a current, actionable overview of Klarna Group plc, what it does, where it stands financially, what Wall Street thinks, recent earnings, its debt situation, and a 5-year outlook. This summary combines the latest earnings data, market reaction, analyst forecasts, and structural risks. What is Klarna? Company breakdown. Klarna is a Swedish fintech best known for buy now, pay later, BNPL, letting customers split purchases into interest-free installments at checkout. Over time, it has expanded into digital banking with products like fair financing, fixed-term installment credit, Klarna Card, debit-style card product, savings and banking accounts, partner integrations with major merchants and PSPs, Stripe, WorldPay, JP Morgan, based on financial reports and company disclosures. It serves 118 million plus active consumers globally with 966,000 merchants as of Q4 2025. US revenue growth is a major driver, up approximately 58% year over year, and banking consumers generate much higher revenue per user than BNPL-only customers. Watch the full video breakdown on the company's 5-year outlook. And remember, I'm not a or your financial advisor. Do your own due diligence. Do your own research and homework. Investing comes with risk, and you'll probably lose money. Investing with confidence is the key to success. Investing for the long haul is the foundation of my life. I'm not here to gamble, I'm here to invest for my future. I work too hard to lose my money. And so should you. Recent earnings highlights. Q4 2025, reported February 2026. Revenue, $1.082 billion plus 38% YOY, first billion-dollar quarter. GMV, $38.7 billion plus 32% YOY. Active users, 118 million plus 28% YOY. Banking consumers doubled to approximately 15.8 million. Losses persist. Net loss reported around approximately $241 million, or approximately $273 million estimate. Credit loss provisions improved but remain a cost. Multiple financial summaries. Market reaction. Despite beating revenue and GMV expectations, KLAR stock dropped sharply, approximately 25 to 27%, due to soft guidance for future quarters and weaker profit margins. Business model and debt/funding. Klarna's key financial characteristics. Revenue mix, largely transaction fees from merchants and interest on fair financing. Credit risk, provisions for bad loans remain a material expense, especially as longer-term credit products scale. Capital structure. Klarna sells portions of its loan book to third-party funds, for example, a $6.5 billion forward flow loan facility with Elliott Funds, to boost capital efficiency and reduce balance sheet funding needs. Unlike traditional banks, Klarna doesn't hold all loans on its own balance sheet, but transfers credit risk and funding cost pressure to partners whenever possible. A structural way to manage debt, but increases dependency on external financing. Wall Street and analyst sentiment. General themes from analysts and market observers. Bullish points check strong top-line growth in revenue, users, and merchant base. Check US market accelerating faster than Europe. Check transition into digital banking, increases revenue per customer. Operational efficiency improving via AI and lean headcount. Forecasts and growth commentary. Bearish/concerns. Profitability still lagging. Net losses persisted even with revenue growth. Guidance for 2026 revenue and GMV came in below expectations, which spooked investors. Rising loss provisions depress margins when scaling fair financing. High payment fees, especially in the US, can crimp profitability. BNPL as a core still carries credit risk and regulatory scrutiny. Market reaction and analyst notes. Consensus forecasts generally see continued revenue growth, approximately 15 to 20% annually, with some models projecting profitability within approximately 3 years as scale and efficiency improve. 5-year outlook. What Wall Street and market dynamics suggest. 1. Continued U.S. expansion. U.S. usage and merchant partnerships will remain the growth engine. Partnership deals, Stripe, Walmart financing products, etc., expand reach. 2. Banking transition gains traction. Banking consumers provide higher yields, driving deeper digital engagement. If deposit products scale, funding costs could drop relative to revenues. 3. Margin and profitability path. Analysts forecast growth in earnings and potential profit turning approximately 2027 to 2028 if credit losses and operational costs moderate. 4. Risks and headwinds. Regulation. BNPL could face stricter rules in major markets. Credit quality, an economic downturn or higher consumer defaults can widen losses. Competitive pressure from Affirm, PayPal, Apple/Google Pay financing options. 5. Market valuation sensitivity. Stock price swings reflect earnings misses and guidance shortfalls more than revenue beats, meaning Wall Street is valuation sensitive. Converting growth into consistent profitability will likely define the stock's longer-term path. What they do. From BNPL to full digital banking, focused on flexible financing and banking products. Recent earnings, record revenue, but still losing money, and stock fell on guidance. Debt and funding, uses external loan sales and partnerships to manage capital. Analyst view, growth ahead, profitability eventual, but with material risks in credit and regulatory landscape. 5-year thesis, if banking transition pays off and bad debt stays controlled, revenue and earnings can grow consistently, but watch guidance and cost of credit risk. Full breakdown of Klarna, business model, debt, earnings, and 5-year outlook. Today we're taking a deep dive into Klarna Group PLC, what they do, how they make money, what kind of debt they carry, what Wall Street thinks, and where this company could be in 5 years. This isn't hype, this is fundamentals. What Klarna actually does. Most people know Klarna for buy now, pay later. You check out online, split your payment into 4 installments, often interest-free. But Klarna has expanded beyond that. They now offer longer-term financing products with interest. A Klarna card, consumer banking accounts, merchant checkout integrations. They partner with companies like Stripe Inc. and major retailers, including Walmart Inc. Their strategy is shifting from just BNPL to becoming a digital consumer finance ecosystem. Revenue model. Klarna makes money primarily from 1. Merchant transaction fees. 2. Interest income from longer-term financing. 3. Interchange and banking products. The shift into banking is important because banking customers generate significantly higher revenue per user compared to basic BNPL users. That's the long-term margin expansion play. Recent earnings breakdown. Last quarter, revenue crossed $1 billion for the first time. Strong year-over-year growth. User growth expanding rapidly in the US. But net losses continue. The market reaction was negative because profitability remains inconsistent. Forward guidance came in softer than analysts expected. Credit loss provisions remain a major cost line. Growth alone is no longer enough for Wall Street. Debt and capital structure. Klarna doesn't operate exactly like a traditional bank. Instead of holding all loans on its balance sheet, it sells portions of its loan portfolio to investment funds, uses forward flow agreements, diversifies funding sources. This improves capital efficiency, but also ties them to external capital markets. If funding costs rise or investors pull back, that's pressure. And remember, BNPL is still unsecured consumer credit. Defaults matter. Competitive landscape. Klarna competes with Affirm Holdings Inc., PayPal Holdings Inc., Financing options from Apple Inc. This space is crowded. The edge Klarna has is global scale and merchant relationships, but competitive pricing pressure can squeeze margins. 5-year outlook. Over the next 5 years, here's what likely defines the stock. Number 1. U.S. market penetration. The U.S. is their growth engine. Continued expansion could drive sustained double-digit revenue growth. Number 2. Profitability transition. Analysts expect potential profitability within a few years, but only if credit losses remain controlled. Number 3. Regulatory risk. BNPL regulation in the US and Europe could tighten. Number 4. Economic sensitivity. If consumer defaults rise in a recession, losses increase quickly. Bottom line, Klarna is transitioning from a fast-growing fintech to a mature digital financial platform. The growth is real. The risks are real. The next 5 years will determine whether this becomes a stable earnings company or remains a volatile growth stock. Like and subscribe. The $1 Investor.